Hello and welcome to another edition of our Business Agility video podcast. So thanks for joining us today. We do this every Thursday at 2 p.m. Mountain Time, and it's interactive. So if you're joined us on the webinar, send us a question, send us a chat, throw up your hand. If you've joined us on the Facebook live stream, send a comment or something like that. Today what we're going to do, we're going to talk about, the topic is your workflow costing you money? So what we'll do with that, and then so actually I should introduce myself. I'm Murray Quibel, president of Aqurus, joined by team members Samantha DeForge and Steve Swenson. And what we're going to do is go through a few examples of workflow, and we'll share some ideas, share some examples, and then near the end of it, we're going to say, okay, if we've identified that there is a problem, that it is costing you money, what are you going to do about it? And give you some practical things about how to do it. So without further introductions, let's get right into our topic. So topic again, is your workflow costing you money? I'm going to throw it back to Sam. So Sam, talk a little bit about workflows and maybe throw some examples and kind of just get us right into our topic here.
Oh God, it's really it's a can of worms that you can open, I think, really, really strongly with, okay, how big do you want the can, Murray? Do you want the can to be big worms, small worms? What kind of worms are you talking about? Because workflows are so important in business. And like we've sort of been, and I've been really referencing that how CIOs are now really focusing on how technology is the business. It is the exact reason for just establishing workflows. That is the reason that, chief information officers now are being rebranded as really critical cores and aspects of the business. So when we talk about workflows, okay, sure, we have an order gets placed through the order desk. The order then gets walked down to shipping, it gets shipped, and then we go and walk down the paper back to accounting. That's a workflow. So when we talk about a workflow and what the gaps could be in that scenario is, one, you're getting emails and orders placed through email order desk, and it's really scary, and you can cost of missing an order. Two, someone can forget to email shipping or receiving to actually let shipping know that, or shipping that they have to ship an order out, or the paper gets lost. Or when it gets shipped, you either ship it and then you ship it again because someone forgot to walk the order down, or you don't ship it, or you forget to hand the paper down to accounting. So there's so many different gaps in that simple workflow that can happen. And that is a fairly common example for a distribution company. So that is a standard, emails, Excel sheets, and paper. Whatever way you really manage or make it go, there's a lot of gaps in that, and it can cost you a lot of money.
Let's stay on that example for a little bit, because I think it's an easy, like you said, it's an easy to identify workflow. Is that you ship some goods, you probably make sure that they're in inventory, and then you look on the shelf, you actually find them. So there's a lot of physical things that happen, and then they get shipped out the door, and then hopefully that, and then you invoice it. But if we stick with that example, maybe let's just drill into a little bit deeper and say, so I think a lot of companies, they think about, hey, we're really lean. We don't spend much time on admin. We have one accountant, and we're a $15 to $20 million company. And I've heard that story many times where the business owner, and we're all, we're business owners too, so we get what they say, but they'll be proud of the fact that they're running that $15 to $20 million company still on QuickBooks or Sage 50 or kind of an entry-level product. And they say, we hardly have any admin. But maybe let's break that down, that example down a little bit to say, okay, that may not seem like it costs much. You're using a really cheap system. You only have one accountant, but where might be some of the gaps and costs? Where might that be in that chain? And I'll throw it over to Steve to start.
Yeah, well, there's definitely, people always look at that and say, I have one admin. Well, they don't. That means that all of the rest of your staff that are your expensive trained people for your type of business, they're the ones doing the admin. Yeah. You're not getting all of it done by one person. So what they're doing is you're saying, yeah, you've got a sales manager or a warehouse manager, and they're constantly printing and walking paper around and signing things, and again, losing things. If a piece of paper gets lost, something doesn't get shipped or it doesn't get invoiced. So they say that they don't have that many admins, but all that means is that that admin work is being distributed to a number of different people, and those people might be your higher paid, very expensive resources. You're paying a senior person to be a manager, and you're now having them manually do paperwork and manually do the workflow stuff that should be automated or could be done by a different admin person.
I'm going to
Yeah,
say
good.
missed opportunity costs without the use of
Sure. Yeah.
automation, because let's say when we talk about automation, right, and I'm going to take this, you might be a mid-sized company, you might be in that 15 to 20 million dollar range now, okay, and that's fine. But when we think about companies like Amazon, or there's a couple of companies in Calgary here that I've seen, you know, doing so many great things, they're using robots. Now, and I get that that's really far-fetched for, let's say, a smaller medium-sized business. It's not entirely far-fetched depending on your volumes, but it is kind of thinking big. But do you think that a company like Amazon, or a company like, I really don't want to name a couple of specifics, but the way that they use automation, and the reason they use automation is so that they can propel their growth. And when we talk about automation in a mid-market size company or a small business, that can be something as simple as streamlining a workflow, streamlining approvals, streamlining invoicing, right? Instead of having to walk a piece of paper down and it's 80 steps down to the hall, or it's in a different building, or it's an email someone's got to craft up on a daily basis, the ability to say the order's been shipped with a click of a button, and having accounting on their dashboard and tile see, oh, there's an order to invoice. That's a method of automation. We don't have to think big. You don't have to think robots and IoT devices and Internet of Things or 5G or anything. It can be that simple.
Yeah,
Yeah,
that's a good
exactly.
example. I like the opportunity cost area, because I think, again, when in the example Steve mentioned, if you have, or I guess I started, but if you have one person that's in admin, I'll put a quotes on that. But what that means is that your senior people, your warehouse people, even your owner, the chief operating officer, depending on what kind of roles you have in your business, those are the people that are actually doing the admin, and they might be managing price lists in Excel, or they're doing manually walking around the office to determine, do we have this stuff in stock, or they're entering orders through emails and things like that. But it's right from the president or owner right through the people on the order desk that are doing the admin, to the warehouse manager and things like that. I think that's I think the opportunity cost, though, of that, as Sam mentioned, is that what that means is that these guys are doing admin. So your president or your owner, well, I think his time would be better spent. His or her time should be best spent, maybe, I don't know, looking at new product lines, or expanding the business, expansion into the US or into other locations, or engaging in peer conversations with people that are running similar businesses and really understanding what makes them tick and things like that, rather than entering sales orders, right? And I think we've seen that all the time, that if your processes are a little wonky, that the gaps get filled by the people that write the checks. Hey, so the opportunity costs are huge. I think we could drill down into that, and really, probably within a month or two, quantify that, holy crap, this stuff is costing you 50, 75,000, 100,000, depending on the size of your business, just in opportunity costs. Hey.
And businesses will get there. It's going to be a mere form of adaptation. It comes back to that farming analogy I use around the clock. Couple hundred years ago, people used to manually tend to a field. Now we have combines and tractors, right? Here in Canada, you have these massive farmers, next door to us in Saskatchewan, that if you told them to hire 150 people to tend to a field, they would laugh in your face. But that adjustment to technology and accepting that level of technology has already happened. Same thing with mobile banking. There was a risk in doing that. And the same thing will happen with business and technology and ERP software, or a business solution in general. Companies eventually will be and take the hint that, why haven't I done this in the past? There's so many levels that I can streamline my business, and I can automate, and I can be more efficient, and I don't have to throw money out the window to be a successful company and venture, really.
Hey, I thought I was going to do the analogies today.
Well, you can if you want.
So that's funny. As we
Talk
were
about my
preparing,
multi-factor water bottle if you want.
geez. Well, as we were preparing for this, we were talking about Disneyland and Disney World. And I think the one thing, and I remember I learned a lesson. It was from my dad when we went to Disney World when I was a little kid. And they were one of the first. You think about throughput and how they process people and get people not just through the door, but get them as efficiently as possible through the rides and things like that. So what they were the first to implement things like, the queuing system with ropes and rails, so that you could be efficient to move through the process. Even though the lineup for Space Mountain might have been thousands of people long, you wouldn't see that because half the lineup was inside, so you wouldn't see that. So that's good marketing. But then once you got into the queue, the thing just moved. Nobody stood in any one workplace any long. But the point being is that that's a really simple. They didn't add any technology. They just put some rails and fastened them into the concrete, and that was just a system that was well defined that helped throughput. And I think that, if we kind of translate that a little bit into the business scenario, there's a lot of things. You don't really have to spend a ton of time and money on technologies necessarily to think of better workflows that you can streamline. And that, of course, is the backbone for automation. So you got to kind of deal with the, look at your shop floor, look at your order process. Maybe you could move the shipping desk from this point over to here if that's where the trucks show up. And again, there's a lot of small examples like that that can help the physical layout, as well as the kind of the kind of the simple things before we even start to think about automation. Hey,
Totally. I totally think so.
And you were right on, and I don't want to date myself and as to how long I've been doing this, but so simple things like EFTs, processing payments electronically instead of writing checks and mailing them. Years ago, that was only for the big companies. You had to pay a lot of money if you wanted to do electronic payments, and only the really large guys did it. Nowadays, everybody, right down to QuickBooks level, can do electronic payments or generate the information that sends to your bank at least. So those kind of things, and what you mentioned about Walmart using robots. Well, yeah, that's not efficient for some of our feasible and pricey, a little bit too pricey for some of our smaller clients, smaller companies. But in the future, you never know.
It's going to get there. I think it's going to get there. Yeah.
And even scanners, the things that we're seeing with scanners now, 5-10 years ago, that was unheard of because it was only for the big companies that could afford scanners and afford to custom write software. Now software uses it, no problem. So there's a lot of those things, and it could be those kind. And as Murray mentioned, it could just be simply optimizing it. Why does it come in here? Do I walk halfway across the warehouse to the desk and then back to the door just to file some paperwork? Can I move the desk closer to the door? So there's all kinds of different areas that you can streamline things in. And I know I looked at it, and sort of changing our example here is project managers. Companies paid a lot of money to have paid their project managers fairly well. And the project manager is the guy who's filling out the paperwork at the end of the day. So you're paying the most expensive guy on your job to do the paperwork. And if you could make it easier and streamline the flow of that so that your employees can do the paperwork and he just approves them electronically and then it goes to accounting and so on, that's the way to optimize. And that brings up that opportunity cost. Can your project manager now run 4, 5, 6 projects instead of 2? Because he's not spending all of his time doing manual work.
It starts to become, and even as sorry, Sam, when it goes to, when we think about, you mentioned opportunity cost, but there is a real cash cost in that too. And I think back to one of the podcasts we did a few weeks back with Dennis Hale and they're in their company. They use some automated workflow and field capture, a system that captures field data and things like that. But it's interesting to he can be very technical, but what they talked about right from the get-go is just kind of unscrambling the business processes. And if that piece of paper needs to go from this desk to that desk, how do we then identify that, get that on the table, and then automate it? But it comes down to the fundamentals, and then we can look at how you might automate it with technology. But the cash cost on that is even just as simple as time value of money. So if through automating a paper process through billing and invoicing and shipping, if that can get your invoices created, first of all, you don't miss them. But if you actually can get those created 10 days or 30 days ahead, I think it's not, we can all relate stories of companies that are tracking time and billing based on field work and time that sometimes they don't even get their invoices out until 45 days after the work's done and more, right? Well, you think, the time value of money, just getting those invoices in the company's hands is, depending on their volumes, that could be tens of thousands or millions of dollars in your pocket. That not only do you get the money faster, but you address issues before they become problems and before you lost a customer. Hey, but I think there's lots of examples that we can quantify around that. But Sam, sorry I interrupted you. I know you're going to kind of jump in there.
Yeah, and I mean, kind of to piggyback on that, right? I mean, yeah, referencing when Dennis Hale was here, yeah, their line of business focuses solely really on the field operation side of things. And you know, whether you're oil and gas or construction, when you're not capturing things in real time, when you're not capturing data in real time, you have no idea where your business stands until somebody enters that information into whatever system you are using to, you know, manage your receivables, your payables, whatever, getting your whole cash flow and, you know, statements, whatever. Because if you think about it, you know, companies like that, when you're talking timesheets or time capture, project management, there's more to that than just that aspect. There's POs, there's inventory, you know, there's expenses that you need to track, or there's timesheets that employees have to do. And whether they're or not they're doing it in that one centralized location, until before they do that, there are a lot of systems in place that are managing all of this, right? So you have a system for POs, you have a system for timesheets, you have a system for fixed assets, you have a system for inventory, you have a system for projects. Now here, let's just say we're gonna stop there. You got how many? That's 5. You have 5. You have 5 systems that don't speak to each other whatsoever. Because the cost of doing that's just going to be really expensive no matter what. But you have 5 systems that probably aren't talking to each other, and you have 5 different types of people having to enter that information into an ERP. And by the time that happens, it could be month end, or it could be 3 weeks later, and you're at that point just getting visibility on where your business was at a particular given time. And right now, like, whether you're construction, energy services, you know, the economy's in a really big limbo. I think a lot of people need to know where they stand.
Yeah, I think that's a really good point, and I think that one of the things I'll challenge you both is that we talk to small business owners all the time, and sorry, I'll just recap the topic here for people that have just joined here. The topic today is your workflow costing you money? So what we're doing, we're sharing some examples and stories and things like that, and then breaking down, you know, kind of some areas where there are some real costs, and then we'll get into some maybe some action items and solutions in a bit here. But that's the topic for today. The one thing I was going to get into is when you start to break down that topic, it's oh geez, I forgot my
can of worms.
It becomes a can of worms, yeah. And the main thing is that as we talk to small business owners every day, a lot of them, hey, we're in a bit of a pandemic here, and the economic conditions aren't the greatest. And so let's say if you sell items, you're a distributor, and you have a team of people, maybe you have 15 or 20 staff. I think, and in that first example we had, let's say you have only one person in accounting. But if you say, hey, we could use a piece of software to automate that, what a lot of the companies will do is say, well, you know what, we've got these people and we can maybe redeploy them. And we don't mind if they spend a little bit of time, you know, with paperwork or with manual processes and that aren't so automated. But that comes to which works, right? As small business owners, we understand the economy. We understand that people are going to do what they can to keep their employees, keep them busy and all that kind of stuff and engaged. But the risk is, again, that might save them money, but that comes to your point you just made, Sam, is that they've lost the visibility across the organization. So if Joe is running around with a piece of paper and he doesn't enter that into the system until a week later when it's time to ship the goods, you have no idea if the order was meant to be processed, if maybe that's going to make you short of stock on something else that Pete wants to sell to another customer. You just don't have that visibility. And again, you're kind of making do with what you have, which we applaud small business owners to do, but really it's cost you money because you maybe have cost yourself another sale because now you don't have those goods in hand because somebody hasn't entered in the system. Hey.
Yeah, and I think a lot of people don't really think about it that way either, right? I think they look at their business and they think, oh, you know, I'm only a 5 million or an 8 million or $10 million company. I really don't need a system. I don't, you know, need that. I don't need processes. You know, everything's pretty organic. Well, you kind of do, you know, it makes sense for you to do it. But, you know, companies that got big, companies that got rich, didn't play the same piano song over and over again for 5 to 10 years and expect to get better. right? I mean, that's the analogy I've been using recently, right? You're a pianist, you're learning the same song. Do you really think you're going to get better than your competitors by doing the same things? You have to take risks. You have to take time to invest, whether it's time and effort trying to learn a new piece, or it's money in a case of business, right? It really is, you know, they say you have to spend money to make money, but when you're looking at a solution, in most cases, you know, when we speak to a lot of businesses, I mean, you know, I've been speaking to businesses about this obviously for a lot, you know, less years than you guys, but still a lot of years. But when you sit there and you listen to someone saying, yeah, I've got, you know, 5 people in payroll, or I've got 8 people doing time and expense, I've got X amount of people doing, and you sit there and you're like, well, you've just told me that you're spending, let's say, $500,000 a year on these processes, and a system can streamline this for maybe a fraction of that, like a really big fraction of that, right? So how do you quantify that? How do you quantify that to a client? And how does the client even know how to quantify it, right? Because maybe they think they need that many people in payroll. Maybe they think they need that many people in expense. Maybe they have no idea, maybe.
So yeah, let's switch gears a little. We talked about him kind of painted the picture that, yeah, there are some workflows that cost money. Here's some examples. But now if we switch gears, and we've got, you know, what, 9 minutes left here, and then what should companies do? I think, Samantha, you referenced an ERP system. Enterprise resource planning is the acronym. But and you mentioned some people think that costs a lot of money, and you just made an example where some of those processes are costing $500,000. Does it really cost $500,000 to get into one of these behemoth ERP system, or what are some of your thoughts on that? Is that, you know, how do companies kind of go about that?
Well, it comes down to, are you picking the right ERP, right? I mean, are you picking the right system? It doesn't have to be an ERP. It could, you know, if QuickBooks is working for you, QuickBooks isn't a bad product. You know, don't change it if there isn't a need to change it. Like I've mentioned in the digital transformation series, digital transformation needs to really give you a return of at least a factor of 2. Right? That's really the way that I like to look at it, is you really need to focus on getting that return and value out of something in order to make it sort of worth your while, especially after the first year total cost of ownership, right? So if you're a company, you know, and you're making $20 million and you're exploring really, really big products like Oracle or, you know, big SAP, you're probably not doing the right thing. You know, maybe even Microsoft products, some of them can tend to get big, or maybe you're looking at things that are too small. You know, like bolting on QuickBooks and using integration tools, or the best one, the one I hate the most is when people go out of their way to build a custom program. Oh, we have a developer in-house, we're going to build this custom program. Okay, so when that person goes outside and gets hit by a bus, you know, worst case scenario, you know, poor thing, that's a huge risk for your business. Or if the program is being written in Excel, that's another risk. So, you know, there is a time and a place to use Excel. There is a time, you know, to do that, but it's really about understanding and, you know, working with companies like ourselves, or even other consulting agencies. If you don't want a biased opinion, or you're fearful you're going to get one, how do I pick the right ERP? And, you know, typically when we see that, it'll go through an RFP process, which is fine. You know, it's just the way the world works. But you really need to open up to a company and really tell them what your pain points are, what your problems are. You know, they're your business shrink. You know, let them find the problems in your life and let them try to fix it.
Yeah, that's a good point. That means,
well, and
Steve,
the thing that I was thinking about with that is the ERP is, and this is something that a lot of companies come to us or come to other companies or solution providers with, is they think that if they buy an ERP or they buy a computer system, it's going to solve their problems. It's not. The workflow that you have, if it's not defined and it's not organized, the ERP, you're just automating confusion, and that's not going to work. You need to have a structure, and that structure, again, doesn't have to be complex. But Murray, you were asking about how do you quantify the cost on that? There's a lot of areas to inefficient workflows. We talked about, I have 8 people doing this job, doing my invoicing in a month. How much does that cost me? If I put in a new system, I could reduce it to 4. How much does that save me? But there's also the other side, and we've seen this numerous times with companies that are, and sometimes it causes them to pull the trigger and buy a new system, and that is they lost a piece of paper and they failed to invoice somebody for $75,000 or $100,000.
Yeah, we have a story like that, right?
We have a story like that.
We do have
and that's exactly it. A one-time error could be something massive. They shipped something out the door and then lost the piece of paper, and accounting never invoiced it.
Yeah.
6 months, 9 months goes by, and you find the piece of paper. You can't go back to your customer 9 months later and say, hey, here's the invoice for the stuff I gave you last year. It's not going to fly, at least not with a lot of the bigger companies. So losing paperwork, inefficiencies, there's all kinds of different things. And that's where an RFP is good, but the RFP is just saying, hey, I need a system to do these things.
Yeah.
But it's not determining, are they what order are these things being done, and how efficient is this going to make you? And when you're looking to buy a system, and your total cost of ownership, what is my return? If it's going to cost me, well, 100,000, 500,000, whatever it was we talk about for a software, and they're usually not that high anymore.
No.
But if whatever it's costing you to put in a new system, what are the savings? What are the efficiencies you would receive? And it is a good idea to look at those. And it can be everything, including now we talk about cloud software. We no longer have to buy servers. We no longer have to have an dedicated IT person to do backups and disaster recovery and all those. So that improves your efficiency, because you don't have those extra, and that's another workflow.
Not your burden to bear anymore.
Right. And it means that all of your staff can be more focused on the money-making efficiencies and the workflows that make your company what they do best.
I think that one thing I want to maybe kind of address is the cost of some of these systems. And again, obviously it's the kind of systems that we deal with, the markets we deal with, we're not in the hundreds of thousands of dollars. Typically, we're not in the millions of dollars. Typically, I would tell people that for a decent footprint that covers off a lot of the business processes we're talking about, it can easily be roughly about the cost of one person. So the salary you might normally pay to a mid to high range person in your company, that's, again, there's scalability and there's variability in terms of the footprint of what you need to do. But that's usually a pretty good benchmark. It's one person, so you might, even if you take one person off the order desk, right there, you can pay for a software that can streamline this whole thing. What I always say, we had this question, I was in a peer group yesterday, and it's a group that we get together of consultants, and one question they had is that, what are the 3 outcomes that you deliver? So each of us went around the table, and what I answered that is that we have, for us, it's, if the first one would be, let's say if we have a company that we implement an ERP system, the first outcome would be to get them to a level playing field. And what that means to me is that their critical business transactions are able to be captured in the system. Simple as that. So that if they're selling inventory, you've got a sales order that's selling inventory that's in the system, and then it creates invoices. But that's just the level. That's the audit trail. That's the level playing field, and that's outcome 1. But you're not, in some cases, that's all people are looking for, and there's a compelling business value to do that because they're all over the map and they're missing invoices. But that's only outcome 1. Outcome 2 and 3 is where you actually take this stuff, and that's where it can help you make money and deliver more value every day. So outcome 2 is streamlining it, and it's that process of continuous improvement. Again, it's not level playing field, it's just a start. And then what do we do with that? How do we become efficient? And outcome 3 is that automate that. So we can identify the efficiencies, but now we automate that, and we use data and analytics to go and get more customers, or go and make more money in every product, or go correlate the data with new customers or new product lines and all those kind of things. But you have to start at level 1, but the outcomes 2 and 3 are what make this stuff super compelling. But that's kind of what, sorry, I'll close on that. And we got 1 minute left, and I'll throw it back to Sam quickly.
But that really comes back to that continuous improvement really perspective, right? So yes, the upfront cost of doing this, can cost the cost of a person, maybe a bit more, maybe less, really depends on what you're looking and what line of business you are in, what level of complexity there is from the audit trail perspective. But it is that constant improving that, once you learn how to do something, you're just polishing at that point, right? You're just tweaking, you're enhancing yourself, because once you're the best, you can't really get a whole lot better unless you have the tools to do so. So you're constantly striving to be better, right? So I do think that there is a level of importance when we talk about always try to continuously improve. And the other aspect of it is really help and lean on people that you trust in your network, not just your brother-in-law, your sister-in-law, your friend's cousin, or whoever, but really try to penetrate the market and gain information on what something like this should cost, what does it look like, because a solution like Acumatica is entirely different than anything else on the market, right? Well, we're unlimited users for one. You know, that kind of licensing, I haven't seen it, right? Maybe some smaller products, but you know, there are differences between these products, and it's really important for someone to really know what those differences are and do the research and in the market for sure.
Cool.
All
Steve,
right.
a quick final thought?
Basically, don't workflows are costing you money. Think about what they are, evaluate them, and it could be everything. It can be the most complicated ones, which people always say, I have really complicated workflow. And at the end of the day, they really don't. Most of the time when we actually boil it down and say, here's the flow that it goes through, there aren't that many steps to it. And they're very similar to other companies. So, but look at those things and see where it is that it's costing you time and money.
Awesome, guys. Well, thanks for so much for joining us. We'll catch you next week.
Sounds good. Thanks.